Hello everyone, my name is Bogdan. Today we will try to be short and as laconic as possible. We'll try to keep some time for your Q&A. So let's start. I will share my screen. Please let me know when you see it.
Is it working?
I think so.
Mm-hmm.
You should be able to.
Yes.
Okay, let me then share it. You see only the slides or the cameras as well?
Yeah, fine.
Yes.
Okay. Then I will start. We will talk about 3 topics today. First, I will tell about myself, who I am, why I am here, and basically what I am doing for a living. And then we'll talk about who is the finance person and then the role of finance function, as Olga mentioned. So about myself, I am Bogdan. I am 31 years old. I am a senior manager in BAT, working in Kiev, responsible currently for the pricing, excise, and revenue part of the business. And just like you, I was a student. I went to Kiev National Economic University, where I got my degree in management and administration. Also, I have a second degree in law, which I finished a couple of years later. So basically 2 degrees. When I was receiving my first master's degree, I went to the National Bank of Ukraine and worked there as an intern at the monetary policy department. Back at that point of time, the National Bank of Ukraine was changing the model and coming to not fixed FX, but the market FX norms. It was a harsh period, and back then it was rather interesting for me because I was doing my paper in terms of the monetary policy, and it was the best time to write it because it was something new and not tested in Ukraine at that moment of time. Afterwards, when I graduated, was still a student in law, I went to EY. I worked there for 3 years, started as an intern as well, and got 2 or 3 promotions. I used to work as a tax consultant, dealing with personal income taxes, immigration law, dealing with other law-related stuff mostly. But also I was the one to work with private clients, calculate assets, and more different stuff to do. I think the most interesting part when I was at EY was when I had a project on cryptocurrencies. It was 2017, I think, when the Bitcoin first hit its 19K USD mark. And there was one guy who earned a lot of Bitcoins. And then I basically opened the new world and understood how it's working and how the money are appearing from nothing. Basically, afterwards it dropped to 3K, but it was like some kind of get acquainted to the cryptocurrencies market. And after the EY, I went to BAT. As I mentioned, at EY, I used to be a tax legal consultant. And BAT, I changed my career from the upside down. Basically, I started to work in finance as a global graduate. It's a good program, by the way. You can earn the management role in 1 year after applying and coming to the program. And here I grew from this global graduate to senior manager within 3 years. And now I'm responsible for the whole revenue stream. I have a team. Basically, we are dealing mostly with pricing, with the volumes, with different kinds of the revenue-related P&L. During my journey in BAT, I also worked at the investment stream, so I was also responsible for the whole resource allocation for the end market. which also helped me to understand the topic of the role of finance and to help maybe even you to understand why the finance is crucial, why the finance is important, and what is the role of the finance.
Это у меня лекция просто в универе. Это просто тоже мне нужно слушать.
Sorry? You had some questions?
I think that it's some technical issues. Okay.
Let's move on then. Who is the finance person? I tried it to be more or less in a funny way. So let's see. There are three types of finance person you can see. The first one is a stereotypical one, like stereotypical finance man who is working there for 20 years. Everyone is afraid of him, and basically he looks like Joffrey from the Game of Thrones. He has catchphrases for him and why he is hated or nobody likes him, that he is close to something new. He is reluctant to give funding, and he is very micromanaging with the documents to be accepted or not, and something like that. So fortunately, for the last decade, this is not the true anymore. So Joffrey, finance guy, is not Joffrey. However, a lot of people in finance have a high level of self-respect and high level of self-motivation. And basically, a lot of them tend to think that they are some kind of, I don't know, Daenerys, like queen. I can do everything. I know everything. I can beat everyone, and I am the most important person here. Sometimes it happens, but fortunately, this is also not true. The reality is somewhere in between. And I tend, it's my personal opinion, to think that the real finance person is looks like Tyrion. So he is a smart guy, usually smart guy, who is an advisor, who knows something and wants to help, who wants the person or the company to succeed, who wants to make the difference and make the company or the world a better place. Basically, I tried to find the catchphrases for him, and for me it was, we will put 2 + 2 together. It's a math, but this 2 and 2 sometimes is not so easy. And the guy is someone who helps, someone who still controls, but who is the advisor, not the enemy, who is the arbiter, not the queen or the king. So I think it can be an overall portrait of the modern finance person. So as we are here, we'll go to the role of the finance function itself. I tried to split them into 5 parts. The first one is, as I mentioned, it's to be a trusted advisor to the company, referring in case of some miscommunications or other stuff. The second one is to help the company to drive the profitability, as usually the finance goal is for the company to succeed in terms of financials. Third one is to support with the effective resource allocation. Fourth one is to act as a bank for a company, basically to work with the cash flow and the cash inflows, outflows in a manner which will be the most efficient one. And the fifth one, controlling, is there, and we must ensure compliance with standards and rules. There are additional roles, like I think that finance is the department where we can adapt some kind of new technologies, implement new solutions, and support business in a better way. So it's still, it can be as a trusted advisor part, because when something is implemented in finance, it's usually can be scaled to the bigger scale, to trade, to planning, to other departments, and it will help business work as one mechanism. So we will go one by one. For each role, I will try to explain what I mean by all these points. So the first one, the common dilemma. Sales want to sell more. Brand marketing wants to improve the brand, but it's not always the same. Basically, if you want to improve the brand, you want to make the brand much more expensive, make it premium, etc., etc. But usually this premiumness comes with lower sales. So what is the role of finance here? Basically, you should tie these two goals together and sell better while improving the brand. So the finance guys are stress testing the goals, are trying to make a difference, and basically to work as people who want to help. Usually finance in organizations is someone who helps, someone who is the right-hand man of the GM, of a person who combines all the solutions, who combines all the points of view, and basically has the biggest scale of information across the board, because sales see one side of the coin, brand marketing another, and finance tries to see and sees the whole picture. And this whole picture helps the finance to navigate the business in terms of the way of a goal, of a mission, of a vision, etc., and supports the other functions with making their lives better, the company's lives better, the performance better, and everything else. So yes, we don't sell directly the product. Yes, we don't improve the brand directly, but we control it, we stress test it, we speak to each other, speak to other departments, and trying to find the middle solution which will be accepted for everyone and which will support the business in the long run. Drive profitability. I still try to make it with Tyrion. So let's assume that this jar with wine is our business, where the jar itself is the size of the business and the wine inside is the profit we gain from it. Basically, how can the finance drive profitability? Two ways, two very simple ways. The first one is to make the jar just bigger. What I mean here is to grow the revenue. Can be a different way. So it can be a smart pricing, when you increase something in price and gain more revenue per pack, or decrease even price and make volumes in a different direction. So you can gain volume, you can gain price. You get a positive mix of prices, positive mix of everything, and you basically grow the revenue. Small example from the British-American tobacco, for example. Tobacco business in Ukraine is not a standard one, because in Ukraine, cigarettes cost a lot. 100 hryvnias per pack, you can find a pack of cigarettes. However, tobacco business have a huge pressure in terms of taxes. So the total tax incidence, basically how much taxes we pay out of this 100 hryvnias, is more than 70. So even though the prices are high, the business earns not a lot. So this smart pricing and volume growth is crucial here, because every and each hryvnia you take won't give you that much money. Even if it does, still there is a huge competition. As you know, it's 4 big companies. Everyone is trying to make their best, and they are fighting for volumes forever, and that's it. there are also a lot of illicit players. At some point of time, you can just imagine the illegal sector of tobacco industry was 25% of the total market. So it's every fourth pack was illegal without, and what do I mean with illegal? That we are paying this 70 hryvnias of taxes at one pack, and they don't. Hence, they can price it much lower and still earn more than us. So, in order to make this live, to grow the revenue, we should consider competition, consider illicit and everything else. We are as finance guys working with pricing. We are trying to make the price strategy in a way that will ensure that we are competitive against all the competition, that we are somehow competitive versus illicit where it's possible. It will be still much more expensive than illicit product, but it's better one. And in the meantime, we are trying to grow volumes with that pricing and support the long-term perspective. Because yes, for example, you are a finance guy, you want to make your revenues skyrocket. You increase the price by hell of a lot. You get the volume, you get the financials in 1 year, but it's not sustainable. At some point of time, you will face the huge decline, and in long run, strategic wise, you will lose. So it's important to balance out between all the factors and to grow revenue steadily year on year to be able to support strategic wise the company and tactical wise as well. The second one, you want to make jar just fuller, returning to Tyrion, and it's the cost base. So what can be done? When you look at the share of costs, the finance guy and the finance function tries to support the business, to make this fixed cost base lower so that the business could invest more in something which will grow well, which will bring value in long term. So the first one is production efficiencies. Again, when we are talking about the realities of Ukrainian market, you might have seen we have high devaluation, again, increased unpredictable tax systems, lack of potential to hedge the funds, etc. So this cost base is becoming more and more crucial every year because there is less and less tools to keep it stable and to keep it from growth. So the finance is trying to make it work different directions. Sometimes it may be projects to improve efficiency. Sometimes it may be projects to implement something new. For example, in my department, it's about the fixed costs. We had a extra person who was dealing one chunk of manual work. How we control this fixed cost of that person? That person is now doing something which brings value. At that point of time, that person was doing manual job. We invested some money and got a solution. We automated some of the work. Basically, it was a RPA robot, which made it all automated. Saved like half a day of the person's work. And as such, this person is now able to concentrate on something important, not just do manual stuff. In terms of the money, basically, it's efficient because people are doing more, people have more time for analytics and to take smarter decisions, for example. In terms of the production efficiencies as well, can be different cases. For example, we had one interesting stuff in ESG agenda. Everyone knows what ESG is, I hope. So basically, there was a pack of cigarettes with the aluminium foil inside. Aluminium is the material which grows in price and not super healthy in terms of ESG. So what was the decision? We changed for some packs this aluminium foil to the paper one. So first one, became more environmentally friendly. Second one, paper is cheaper than aluminum. As such, we had some efficiencies in terms of production. So moving to the next one is resource allocation. Basically, I tried to find a quote about the resource allocation. I found one for Warren Buffett. It's price is what you pay, value is what you get. So everything comes with the price. And basically, how the finance supports the efficient investing in the company. So the first one is pre-evaluation of the projects which are there. Second one, risk management, on-the-go support of the projects, timely feedback on investment. Basically, it's easier said than done, because at the point of resource allocation, the person in finance is basically someone who works closely with different segments of business, trying to find a solution on the most efficient investment, trying to find the ways to reallocate the costs when they see it's not efficient or something goes wrong. And here is a super important topic, because the budgeting purposes themselves with the costs, with the project's evaluation is crucial, because if you don't evaluate the project, people will do whatever they think reasonable, and it might be not efficient. It might bear the cost for the company and not help in the long run. However, the finance here works again as a mediator and tries to support with all these projects, with all these resource allocations, etc. When we see with the project itself and the evaluation, the project usually has it's simplified 4 phases: initiation, planning, execution, closing. So what is the role of the finance in this particular stuff? When we have planning, the finance can do a pre-evaluation of the project. Basically calculate potential ROI, paybacks, NPVs, etc. Compare this particular project to another one. Compare ROIs for these particular projects to the somehow, I don't know, fixed margins from bank deposits, etc. And find the solution of if it's important to invest or no. Again, some projects require a lot of money, and finance here is not only pre-evaluating but supports with finding the funding for the project itself. And basically, when the targets are set, targets should include not only qualitative but also quantitative targets. Finance helps with that as well. Then we come to it's everything planned and launched. At the execution phase, finance also has its role. Again, usually we don't do the actions directly, but we support on the go. We are trying to monitor the deliveries. We are trying to understand what's going good, what's not. If there are some kind of discrepancies versus initial plan, there can be changes within the execution phase when you need to adapt to the new reality, when something comes, when something changes, and it is all there. And then in closing, when the project ends, it's super crucial for the finance and for all organization to do this post-implementation review of the project, because you see, hey, was your plan good enough? Did you have enough information? Did it go good or bad? And the most important, what can we do differently next time to make it better? There is never any project without learnings. So we should take the most part of the process and understand what can we learn from it. If it's a success, can we repeat it and scale it in different way? If it's a disaster, what we did wrong and never repeat it again? If it's somewhere mediocre, what can we do to make it better and what changes. So this stuff is super important and it's a crucial part of finance work because it helps to understand in long run what business can do, why business should do it, and where should we concentrate. Basically, in these terms, in terms of the evaluations, planning, and everything else, as you know, currently we are coming with a lot of civilization in the world. There is increasing role of AI in the companies, increasing role of some kind of machine learning tools, etc. A lot of people come from Excel to Python and other automated systems, which makes this planning phase more robust, which helps to analyze better, to get better results in terms of planning and to foresee and forecast better. However, what I wanted to say and what is crucial. So again, AI. I trust that the future is there. AI is here. AI is supporting us. But for the current business, the AI itself is not only friend, because you never know what is the confidentiality issues with the AI at this point of time, because everyone knows ChatGPT, but you never know where this information can come along when you put confidential data there. So some companies try to implement AIs within their ecosystems and as such fix the issue with confidentiality. On the other hand, the AI tools themselves are still kind of raw, and sometimes you need to double, triple check after them. I faced myself the situation. It was personal, not work related, but I faced the situation with ChatGPT when it was answering very, very crappy things, because it was so far from the reality that I thought I'm talking to the guy of the first class at school. But then I read the forums, etc., and understood that there is a limitation of the capabilities of AI at some point of time, especially in the peak hours when a lot of people come and try to get some information from AI. And in these terms, I suggest, and when I saw it, the congestion happens in the very first hours of the working day in the US, where people implemented it in much higher scale and use it in a higher scale versus the EU. So it's our 4 p.m. and afterwards becomes not very efficient. Sometimes, maybe I'm not lucky. Can be the case. For the other stuff, in terms of automation and projects, basically this can be not only marketing projects, but finance as well. Now we are trying to make a project on our own, and it's about the automation, and we are trying to implement Python within our systems and analytics. It will have more or less the same, but we are now in planning phase. Hopefully, this automation and the new technologies will support us and make our lives better. I trusted in it with all my heart, and I'm trying to become better for myself, for the team, for the company, and at some point of time to make it work. About the resource allocation as well. I was saying about the project evaluation and the efficiency of the evaluation and the importance of post-implementation review. It's also from the Game of Thrones. So on the left-hand side is, I think they're called Golden Cloaks. Right-hand side is Mr. Frey. On the first glance, when we look at these two projects of Lannisters, we see that the first one is super expensive, looks super fancy, could have protected Cersei from from the Targaryens. The second one was much easier. He looked not so fancy, but what happened in the very end? The first one got massacred in a couple of seconds. The second one made everything and even on top versus what was the target. So pre-evaluation was parity or even the left one was better, but post-evaluation and post-implementation review showed that the right-hand side being maybe even cheaper is better option. That's how the lessons are learned. Okay, let's move on. The first point, act as a bank for a company. So usually in companies, the finance department consists of different streams. And one of the streams is the treasury department. It's super important in terms of every aspect of the business. Because beforehand, we were talking about the efficiency of investment, the ROIs, paybacks, etc. But where do we get the money? How do we protect the money? Where we are standing right now? What can we do to protect the earnings in an atmosphere of devaluation, of FX losses, of everything else? Here where the treasury comes into force. So what treasury can do? The first one, they can protect the gains by using the investment tools. I used the example of government bonds because we use it a lot. We are basically investing into the government and supporting the government not only with the taxes but also with investing into the bonds. Helps us to protect the cash and help the country. The second one is more crucial, more important. It's more realistic to do in a safe environment. In war, it's super important, and wherever we try to do it. It's to hedge the losses from for example, FX differences. Because at some point of time, when you work, you understand that okay, it's just an example. But tobacco related. You have tobacco leaf bought in 2021 at the cost of, I don't know, 27 hryvnias per $1. And at that point of time, you thought, okay, I have 1 year of stock. I don't expect huge devaluation. I will still hedge it. It will help us because there is still devaluation going on. I will somehow block part of my cash to get the benefit later. Then the war comes. You still have on stock this leaf from 2021. You are getting much better margin from it because the FX is already 40. And for example, you cannot import it anymore, but you still have stocks. So you ensure even not only hedging profit, but you also ensure continuity of the business. Again, efficient financing of operations. Very important. It somehow correlates to the projects, to the investments, and basically to what we do. We need to find the most efficient ways in terms of the operations financing, in terms of the cash, to make the lives better. It correlates with the first point, with the correct use of owned and borrowed funds. That's how the cash flow forecast becomes crucial. Because at that point of time, you understand how much money do you have, when do you need to invest, where is the surplus of money which you can put to government bonds, for example, where is the not enough funds, where you need to borrow funds, or you can avoid borrowing but make the line a little bit better. You can compare. What if I buy bonds 1 month or later, but I won't take credit? I won't borrow any funds. Will it be more efficient or not? So usually the businesses not always work on own funds. The borrowed funds and the credits are widely used. And it's super important to keep the balance and to make it the most efficient as possible. But here is where the other part of finance comes into force, the forecasting. Because, okay, you think it's like this, but in reality, the trade department comes and says, okay, I made some kind of mistake. I need this money 1 month earlier. And then you face a situation when you cannot fund it without borrowing. You still should understand, do you need it or not? Can you postpone the payment terms or not? Can you do anything to make your cash protected? And then choose the decision. Maybe you need to postpone, as all your ROI will be eaten with the borrowing of funds, or maybe not. Okay, and the last one, but not least, for sure. It's about the compliance with standards and rules. So it's all about different departments, but the finance as a department acts a crucial role here. I like how Benjamin Franklin said once. He said, obey the laws, or the laws will obey you in a way you won't like. So if you are working in an international company which obeys the laws, which does everything right, everything correctly, you need to continue doing it, because at some point of time, it might be too late. Someone will come, say, the audit will come and say, okay, hey, show me this. And you understand that the laws were not obeyed there, and you broke the compliance. And it goes straight to the full audit, to some kind of fines, penalties, taxes, etc. No one is secured from paying extra taxes. It's about the laws and rules, especially in Ukraine, where the tax code and the tax legislation is one of the harshest in the world in terms of it being not super straightforward. But it's better to find discrepancies yourself and don't pay this fine, but just to overpay the tax at some point of time, rather than the tax authorities will come to you and break your life. But what is important is the standards and rules. Working in an international company ensures that, look, BAT is working for more than 100 years. The company without bureaucracy wouldn't have survived this time, because this standard, these procedures is not something they just want to do. It's the reasoning of the lessons, of the mistakes and everything else which came alongside the way. For example, maybe you know, maybe not, in 2004, I think 2004, I may be mistaken, maybe 2008, there was a huge scandal in the US with one huge company called Enron. They broke the standards, they broke the protocol, and it was together with, at that point of time, one of the biggest auditing companies in the world, Arthur Andersen. You know where it left? Enron dissolved, Arthur Andersen dissolved, a lot of people committed suicide, and then we got the Sarbanes-Oxley Acts, which is the rules on how the processes should work. So do we need to have it? At some point of time, you say, okay, it's extra work, I don't want to do it. But it appeared not out of the blue. It appeared because of a reason. And all the standards usually appear because of the reason. So we should be aware and mindful about the standards, mindful about the bureaucracy. Yes, you shouldn't make your life the full bureaucracy, but the core standards, the important standards should be there because it supports business continuity. It helps the companies to survive hundreds of years. It helps the companies to be managed in a more efficient way because when the standards are the same across the board, across the whole world, it's easier to understand if you're doing something correct or not. Basically, it's also something which comes when you have a huge corporation with different layers that it makes control over the company because at some point of time, for example, the headquarters doesn't want you to have the power to take this decision. And these standards also appear not like that because at some point of time, the people on the end market might not, as I saw, sales may not see the full picture of end market business. Finance may not see the full picture of the area business. And when you see on the global level, you see it from the very inside out. All the processes, all the markets, all the targets, all the goals. And for some places, some decisions should be taken there. Who understand the goal, who understand why, who understand when. Yes, the end market will be the one to drive the change. The end market will be to propose the change and everything else. But sometimes it remains important for the higher levels to be responsible for something. I think that's it. More or less, I'm in time. I wanted to end it in quarter to one. So that's my story. That's my vision on how the finance function helps the business.